ANMI. So, I think this story is important because it brings a lot of clarity. There's a lot of kite flying out there, folks, about something which is very crucial to how the market is looking at it right now. And you've seen certain set of stocks running up also on reports that there will be no touching of weekly options right now. Well, we are focusing on what we are learning based on our sources, which we have complete trust on. We are saying that SEBI is likely to discontinue weekly options. It's coming, but it's going to be in a calibrated manner, and there will be a sunset clause to settle existing weekly expiry contracts so that there's no jerk. But this is the direction in which the regulator will move. Nikhil Khandelwal, MD of Systematics Corporate Services, joining us on the show this morning. So is K. Suresh, President of ANMI. Mr. Suresh, let me start with your take first. In a scenario where weekly options are, and how it should be done will be my next question, but in a scenario where weekly options are eventually discontinued, what is the kind of impact that you see?
See, from my community side, definitely brokers side, it will be a big hit with respect to volume and revenue also. That is inevitable. But the question is that, is it necessary to go fully on that aspect? I mean, removing the weekly expiry. I think what we have misunderstood is that what constitutes the loss? Why losses happen? Why investor is losing? If you see, make a deep analysis, it is not because of the instrument or anything else. For example, we had earlier monthly, what happened? There also people lost money. So ultimately, the result is, rather the cause is, what's called, we are having uninformed investors in the market. So there's a big gap between educative and non-educative investors. So that gap has to be bridged by SEBI, because SEBI already has a tagline of investor protection. When that is the tagline, naturally SEBI should think how to reduce this gap and how to institutionalize the training aspect and everything for the benefit of the investors. So that, informed investors taking part will reduce the what's called SEBI's concern about the losses to the individuals, rather retail participants, and also the speculative activities also will come down drastically. Already we have also suggested to deepen the cash market by bringing in more and more stocks in the F&O segment. That will deepen the cash market. Once cash market also deepen, people can shift their focus to the cash market instead of the F&O market. So that also we suggested.
Yeah.
So it is a combination of 2-3 things which we have to think, not at one stroke thinking to wipe off the weekly expense.
Got it.
That's
Mr. Suresh, well made point that yes, you have given options to SEBI as well as to what are the options that they can consider, and an impact in terms of revenues is what we should be talking about. In fact, let me get in Nikhil as well to comment on this. Nikhil, what could be the likely impact on broker revenues firstly? And how do you expect the trading volumes to shift from here on? Do you think they will start moving to, say, monthly contracts or other derivatives, or exit the F&O space completely? And how do the dynamics change then?
Hi, good morning. So as far as revenues for brokers are concerned, the data says that for discount brokers, one of which is also coming for an IPO, and Angel, which is listed. The revenue from F&Os extend from F&O trades, including weekly expiries and monthly expiries, etc., are close to about 60% of the revenues. So definitely it's a significant number for discount brokers. For other brokers which are more focused on HNIs and institutions as clients, I think these contracts and F&O trades will be close to about 30-40% of the revenue. So it's a significant amount, F&O, and definitely weekly expiries have taken a lot of volume of the retail clientele. So hence, I think the hit will be more significant on the discount brokers if and when any significant decision is taken by SEBI on this matter. While it will be fairly low on the less discounted or full service brokerage houses. In our view, SEBI is already in consultation mode with the brokers, and the approach is that from SEBI's perspective is that the speculative activity in the weekly contracts has been significant. the losses by retail investors, which is the paramount thought in SEBI's eyes, has been significant. Almost 91% of the investors have lost money through these weekly contract trades. But at the same time, I think SEBI is taking a calibrated approach to it. In our view, there is no knee-jerk reaction by anybody, including brokers or investors, to tell that to get out of FNO or stop trading on the weeklies. I think it is going to be a calibrated approach, and SEBI will give enough time for a phased reduction
Absolutely.
of
Absolutely. I want to pull up those lines again of our exclusive story that our Delhi Bureau Chief Shimi Chaudhary has put out, and you're already seeing the impact after we've put out that story. Pull up the intraday charts and you'll see what's happening with capital market facing stocks, whether it's BSE there on your screen, MOSL, and a whole host of them as well. Nikhil, my question is that, and you know, I have to say this because so much confusion and conflating information out of this. You have stocks running up in anticipation of that. The fact is that there's no real debate here, right? The regulator has been clear on more than one occasion that they do not want to encourage speculation. Yes, they want all opportunities there, free and fair trading opportunity and all of those instruments there, but the impact that expiry or options have had, the frenzy over there, and the kind of retail investors that came in without full knowledge is something that the regulator is very actively going to try and discourage. Yes, they will do it in a graded manner, but that matter will be there. What do you think happens with these capital market stocks then as a result, specifically to some of these counters?
No, as I said, the approach from SEBI. So first of all, the weekly contracts, as and when they were introduced with, I'll say, less oversight, and multiple such contracts came into the market. SEBI took one of its first decisions to first say that reduce the number of contracts, which has already been done. Now per exchange there is only one index contract which is there on the weekly trading level. So that kind of activity has already been done. SEBI has also started to increase the cost of trading in some of these contracts. So SEBI has started to take a calibrated approach already towards the weekly contract trades, which is wherein they have actually seen, and data has proven that the retail investors are having significant amount of loss. I think the direction is that there will be a calibrated reduction in it. Maybe there will be a complete overhaul in it, and the impact on brokerage houses, I believe, will be a little bit more significant on the discount brokers, as I said, maybe on firms like Angel and Grow, etc., which are coming to public, and less on full service brokerage houses like ourselves, like Nuvamas or Motilal Oswal, etc. This is a broader assessment. Having said that, the Indian investors, whether it's retail, HNI, or institutions, I think they will shift their positions in a calibrated manner again into fortnightly and the monthly contracts as and when there is any change by SEBI. And the hit actually may also be in a very calibrated manner. It may not be a knee-jerk hit on the earnings of brokerage houses. I believe this will have a much more larger impact on exchange earnings, and exchanges actually also garner almost 60 to 70% of their revenues from FNO trades, and a huge part of it has become started to come from the weekly and the fortnightly and all these contracts. So I think there will be a significant hit there as well, because the kind of volumes and the charges which they were collecting from these trades were also significant. So discount brokers and exchanges will be the most hit in terms of their earnings, followed by the other full service brokerage houses.
Okay. In fact, a quick question I have, Mr. Suresh, for you. If you're talking about a phased discontinuation that would have been adopted so far, how should exchanges decide in terms of which index or contracts get to retain the weekly expiry if it is allowed? And two, what measures should be actually put in place to avoid sudden shocks or any liquidity collapse when old weekly contracts actually expire? How should this be dealt with?
See, actually, madam, my view is that instead of having weekly expiry per exchange, we can go for only one expiry for all the exchanges. So because of that, what happens? You are avoiding further risk. Actually, you are bringing only one. You are making only one expiry means for all the exchanges. So it will be depending upon the other aspects only. The business will be there. It will be good, and there won't be further concentration of risk for another expiry also. So the expiry game will come to an end. So instead of closing the weekly expiry, we can compress it and have only one expiry for all the exchanges. That is one of the things which we feel good for the market also. Second, instead of shutting down the entirely weekly options. Second thing is that, as I said earlier, I mean, we have to think further down actually. I mean, we have to grill down further and see the root cause. I mean, simply assuming that everybody is not in hedging or doing speculative, that may be a superfluous statement, but actually, people are not aware of the conditions of the market. People are not aware of the benefits of that. People are not aware of how to deal with the market. So that aspect we have to address. For that, we should have SEBI recognized training institutions so that they can give
Fine,
proper training.
so the fact is, Mr. Suresh, that those who want to train and who want to learn, there are enough courses right now. There's enough literature there from the regulator as well on not to be speculative. But the fact is that this is a space where the retail investor is a losing proposition from day one.
No, that's why I'm saying you should bring some entry barriers.
Okay.
I mean, you can't allow.
So you're saying don't stop weekly options, bring entry barriers.
Yeah, for example, I am joining today as a client. I should not be allowed to play F&O today itself. I should have some 6 months gap.
You should get people to write an exam, or you should
Exam.
see
Yeah,
their
we
bank
can put
balance,
it
or what is
exam.
it?
Yeah, in Korea market, I think you know very well, exam is there for the F&O. Without exam, F&O, nobody can enter.
Okay.
So like that, you can introduce exam
Anyway, your
barrier.
volumes will drop if you ask people to take exams.
No, see, volumes, I'm not again, I mean, saying we will not be affected, it will affect it initially.
Okay.
But once, put in place all these things, it will pick up and naturally the business will go on.
Oh, okay. Thank you so much, K. Suresh. Thank you so much, Nikhil, for joining us in this conversation and giving us your point of view. We want to put it out there very clearly that this is the direction in which the regulator is heading. So be very careful when you're listening to speculative news about what's happening. This is what they have said clearly. They've said it openly. It's a matter of how rather than if that this will happen and this phasing out will take place. Okay, now talking about what's happening with the markets and